Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 16th of October, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 0.4% today to 8,284 points. That's after yesterday's record high. Tech stocks led the way lower. Uranium stocks were also poor performers. IDP Education was down another 5% today. It's having a horror run. The gold stocks were among the best. If we look at the large caps, underperformers included BHP, Rio Tinto, WiseTech, Woolies, Brambles and Transurban. The big banks and Goodman Group were among the best. In corporate news, glass bottles and cans maker Aurora says softness in volumes in Europe is persisting as customers, including spirits makers, cut back on inventory levels. But there are early signs of recovery in the North American market. Its share price fell 3.5% today, and Challenger reaffirmed that its fiscal 2025 net profit would land around $460 million. Its assets under management rose 1% in the first quarter thanks to a massive jump in Japanese sales, though total life sales fell 14%. Its share price was down 4%. Story number 2, Woodside has outlined record quarterly production for the last 3 months, triggering a 0.6% jump in the oil and gas giant's share price. There hasn't been much good news for Woodside in recent months. It is definitely among the worst performing stocks on the ASX 200 over the past year, and certainly among the large caps, it has underperformed. It has a new oil project in Senegal, and rapid startup since June has helped it deliver record quarterly production of 53.1 million barrels of oil equivalent. Now, the mine's called Sangomar. It's been criticised by environmentalists. It cost about $7.5 billion, and it's already doing 100,000 barrels of oil a day. Helping production overall was output from Pluto and the Northwest Shelf LNG ventures in Western Australia. Woodside also said it will delist from the London Stock Exchange next month due to low trading volumes. Hopefully that'll save itself on some administration costs. Story number 3, one bank that hasn't had a great time of it lately is Bank of Queensland. While the big four have been going on their merry way, the regional lender has struggled to compete in mortgages, has had to cut staff and abandon the group's franchise model. But there was some good news today. While it announced a 24% drop in cash profit, the result was better than expected. It also lowered its final dividend. The good news really was net interest margins. They were higher for the half year till end of August. That's kind of like the profit margin for the banks. That triggered a 7% jump in Bank of Queensland's share price. CEO Patrick Allaway said he's optimistic on the outlook and strategy. That strategy involves dismantling the franchise model, cutting $250 million in costs and reducing job numbers by about 400. The hardest thing for small lenders at the moment is to compete in the profitable mortgage market against the big four. That's something that Bank of Queensland is shying away from at the moment. Story number 4, the world's total public debt is set to exceed $100 trillion US. It's 150 trillion Aussie. This year for the first time, according to the International Monetary Fund, and it may grow more quickly than forecast as political sentiment favours higher spending and slower economic growth amplifies borrowing needs and costs, according to a report on Reuters. The IMF's latest Fiscal Monitor report shows public debt, which is government debt, will reach 93% of global gross domestic product by the end of 2024 and approach 100% by 2030. That would exceed its 99% peak during COVID-19. Part of the reason why the IMF expects future debt levels to be higher is the desire to spend more in the US. And finally, story number 5, on Wall Street, Goldman Sachs reported a big jump in third quarter earnings this morning to $3 billion, much higher than anticipated. In Europe, one of the world's big chip makers, Dutch-based ASML, shed 16% in value after saying it booked only about half the orders analysts expected in the third quarter. It also lowered its guidance. That didn't help the other chip makers, including Nvidia. That one ended down 4.5%. Oil prices continue to slide and the fallout has hit other commodities. Lithium and iron ore prices fell, taking stocks with them. Copper fell to its lowest level since late September, while nickel and zinc were both lower. Gold's the outperformer. It's hovering near record highs. Risk assets generally are being sold down. That hasn't helped the Aussie dollar. It's buying just under 67 US cents, whereas 2 weeks ago it was heading towards 70 US cents. That's it for the afternoon report for Wednesday, the 16th of October, 2024. Michael Thompson and I will be back tomorrow morning with the Thursday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.